Hi there. Welcome to this week's edition of Deb Talks. I'm Deb Owen.
Yeah, I'm Lupe Castañeda.
And we're giggling because our camera girl's gone this week. So you really get us raw and live. And when we stop this, gosh, only knows what you're going to get.
Yeah, so this is raw, as raw as it will get.
This is.
Yep.
Mm-hmm. But this week, what we want to go over is the pros and cons of a VA loan. Mm-hmm. And of all the loans that we can do, honestly, VA lending is by far my very, very, very favorite loan to help with.
Yes.
And really it's for the obvious, which is our veterans. Whether you have served in the military or currently serving in the military, I feel like there's no better loan that's available out there than the veteran loan. And we personally want to make sure anybody that qualifies for that veteran loan gets the opportunity to have that veteran loan.
Right.
And there are some pros and cons to it. Mm-hmm. And if you want to know the truth, I don't even know truly cons to this loan.
Yeah, I was just thinking that as well.
I mean, the title of the things that we're going through is pros and cons. Mm-hmm. But there just isn't a con. There really is not to this loan.
No.
I guess with one potential, I guess there is one exception. I'm just going to jump in.
Go for it.
Okay.
Let's just get going. And what I want to say right before we start is, even if you are not a veteran yourself, please listen to the information, because there are lots of veterans out there, and you could be in a conversation of somebody that is looking to purchase a home or even talking about a home purchase, and you'll have the information to help. So yes. Even if you're not a veteran yourself, just please, this is good information.
Yeah.
Right.
And we at Guild are direct lenders to VA.
Yes.
That's a big deal. That's a huge deal, because most of the time with that, well, not most of the time, every time, we can go directly to the VA office and help that veteran obtain some of the documentation. In fact, we can get it relatively quickly. If we can't, then we will get the veteran involved, because it's actually more in more things that would be needed from the veteran. But we would walk that veteran through every piece of that.
And let's debunk the myth right now, Debbie, because a lot of people that are veterans think that they have to go directly to VA to get the loan.
No.
So let's debunk that myth right now. Why is it that we can do it and they don't have to go directly to VA?
Well, first of all, we all know how fun it is working with the VA office. We do. But that is one of the perks of being a direct lender for a VA, is we already have that back channel open and available to us. And I will tell you, not every lender can do that. Here's a myth I'm going to debunk too.
Yeah.
There are lenders out there that have the title in their name. I'm not going to, well, I am going to call some of them out, maybe. Anyways, USAA is a big one. Navy Federal Credit Union, Veterans United. These are actual lenders, and they really, truly do not have the association with the VA office. I mean, they can, some of them do have the direct back door, okay? Like we do. We're the direct lender back to the VA office. A couple of those do. But don't be fooled by the fact that they have somewhere in their title something to do with the military or the Veterans Office, because truly they're a third-party lender.
Yeah.
That's what they are.
Yep. They're not direct.
They're not.
They're not
associated with the VA office.
Correct.
And that's where that came in line with. There is not a lender that is truly connected with the VA office, because the VA office does not do the actual mortgages. They give certain lenders the ability to use the product to help their veterans. So that's what that comes down to.
Okay, that's correct. And that's what
Glad you thought about that.
Yeah, because I think a lot of people get really confused by that,
right,
and misled,
right.
And so therefore, if you go to these agencies that have that claim, it's not that you're getting the best rate either, because that is another thing. Oh, I got to go directly with them because I'm going to get a better rate.
Right.
So
no. Right. Yep.
Yeah.
So
let's
talk
just
to us
start right
about
right off the bat,
Yep.
clarifying that.
Yep.
Okay.
Talk to us about that. 'cause we did.
Exactly.
So I'm going to go back to my only thought on con.
Okay.
And tell me if a veteran is eligible and they have maybe 20% down, VA might not be the best loan for them. Might not. Okay. And that's just something that obviously any amount of down payment that you would be coming in with, and I'm going to talk about that in a second, what the requirement is, but any amount, sometimes it might not be always better to go the VA loan. Sometimes,
yeah.
And that simply has to do with what they call their funding fee. But again, we're going to look at that because I guarantee you, if you are a veteran and you qualify for that loan, it is so important to us to make sure that if you do, you've served our country and there's no greater honor. And so if you qualify for that, that is where we're going to look at for you and just to see if it makes sense for you to go down the VA route or not.
Correct.
Okay. So in my opinion, that might be the only con on a VA loan.
Yeah. That's where I would also be willing to bet that. Yeah.
There are some fees on a closing statement that the veteran can't pay for. I don't feel like that's a con, but some sellers might think that that's a con. Yeah. And trust me, they're limited. And then if a lender tweaks that fee sheet a certain way, then they're not even required to be paid by the seller. But that's that is out there, and it's not a myth. It's the actual fact that there's a few fees that the veteran cannot pay for, that the seller would have to pay for, or a lender would have to premium price to cover those because the veteran just cannot pay for those.
Correct.
That's going to change depending on the purchase price. And that's also potentially could change depending on how the lender works up that initial fees worksheet to start with. Okay. So that could potentially be a con, just because some people as a seller side, they're nervous about accepting a VA offer simply because they've heard that there are certain fees the veteran can't pay that they have to pay for. Yeah. Those fees are in my opinion minimal, and B, there's a couple ways around that, because again, really honestly, in my professional opinion, there's no better loan than your VA loan.
Yeah.
And
we can't stress that enough. I think we're gonna repeat that over and over and over.
Much, yeah. Yes. So the cons, excuse me, the pros. One of these days I'm going to rehearse what we talked about over here.
And again, we said this is raw. I mean, this is raw. So
yeah. So the pros to a VA loan is obviously if you qualify as a vet, and there are certain requirements for it. The hardest thing is if you're in the reserves, there's a longer time frame that you have to be in the reserves to qualify for VA financing if you haven't been in combat. And then if you've been in combat, that everybody, even if you've only been in it a short time, then, or called to duty, active duty, sorry, I shouldn't say it that way, active duty, then you probably qualify even if you haven't been in the reserves long enough too. But we can find that out for you.
Yeah. And what is that documentation that we will ask for to know what the eligibility is?
Okay. Most lenders are going to want to see what's called if you're released from the service, it's called a DD-214. That's your release statement. Most lenders are going to want to see that. Again, 99.9% of the time, we don't even need that because we're the direct lender. We can go to the service. If you're currently in the service, we do have to get some additional information because we have to make sure your length of time fits the parameters for you to be eligible to use that certificate of eligibility is what it's called.
Yes.
And we can, as lenders, again, typically get that certificate without the DD-214, or if you're in active service, we can go to your commanding officer and get what we need to have in order to see if you are eligible for that VA loan.
Correct. Yeah.
So that's the first step.
Yeah.
VA loans, a really great thing about a VA loan, it is truly 100% financing. So there is no down payment requirement on that. You can put money down, but there is no requirement. And along those lines is there's no private mortgage insurance on that loan.
Yeah.
At all.
That's huge.
That is big.
Yeah, that is big.
But what VA does charge is they charge what they call their funding fee. That is, and I wrote what it is down because I don't want to misquote on these because we've got, all kinds of fees that we deal with, right?
Yeah, exactly.
So if you've not used your eligibility before to purchase a home, you can use it for other things, but what we are going to look for is if your eligibility has been used for home purchase. So if you are a first-time usage, that's what the VA calls it, then your VA funding fee is calculated at 2.15%. Okay, that means if you're buying a home at $100,000, VA is going to charge you 2.15% of that loan amount for their fee to use your eligibility. That is wrapped into your loan.
Yeah.
Okay, so even though you're putting 100% no money down, your loan amount is going to be higher than your purchase price if you're being charged that funding fee is wrapped into your loan. Okay.
Yeah.
If you have used your VA eligibility before, it's called a subsequent use, and you're required to pay the funding fee. That funding fee is charged at 3.3%. So that is one thing we're going to look at when I said earlier, if you have money down, but you're using it more than once, it might be better for you to go a different route than the VA loan. But again, we are going to show you that. Okay, we're going to check that out. There is the other thing we look for, because we're direct lenders, if there's any kind of disability that you're currently receiving from the VA office, we're going to ask them right out the gate. We're not even going to question it. We're going to go to them and we're going to ask them out the gate if that funding fee is waived or not.
Yes.
Because, and there's not they're going to tell us you might be receiving as what you might perceive as little as 10%, disability. That might be enough to waive that funding fee all the way around. Then you truly have no fees involved with it.
Yeah.
No upfront funding fee that's wrapped in loan and no monthly PMI. You will never get a better loan than that.
That's huge.
You just won't.
Yeah.
So we're going to find out if there's any disability that's being that the VA says that fee amount can be waived.
Correct.
Okay. If you're putting money down and if you're putting a minimum of 10% down, then that upfront funding fee they charged, if you are required to pay it, is less. So if you're putting 10% down or more, whether your first time usage or subsequent use of it, your funding fee is calculated at 1.25%. Again, wrapped into the loan. Right. So if you're doing conventional, if you're putting 10% down and you're a veteran, we're going to again look at your VA loan and we're going to look at a conventional 10% loan, which we already know conventional will have private mortgage insurance. But that VA loan might be a better loan for you in that case because there's no monthly mortgage insurance and the upfront fee is very, very minimal in that case.
Yeah. But we will show you. And if you want to see the difference between one and the other, we're happy to show you.
Yeah. We'll absolutely do
very
that.
happy to show you so you can see why one is better than the other for you.
Right. Yep. Back to the fee, if you currently have a VA loan and you want to refinance and you're still owner occupying that property, VA has the very best refinance available. Yeah. They call it their IRRL, IRRL, interest rate reduction loan. That's what they call it. If you have a current VA loan and you want to refinance, a credit report is not needed.
Yep. Yep.
What?
Yeah, exactly.
A mortgage credit report is, but all we do is we're going to look to make sure that you've paid your VA loan mortgage current the last 12 months.
Correct.
That's why we get it. Okay. So a mortgage only credit report would be due.
Yep.
To make sure that's there.
Yep. And we order those.
Yeah.
And
easy. no income documentation from you.
Mhm.
So we don't care. And we do not have to get a new appraisal.
No.
So a VA refinance, again, the very, very best way to do a refinance. But you have to have a current VA loan in order to do a VA IRL.
Mhm.
And
the IRL, just for clarification, can they utilize that for a cash out?
No.
Okay, just for clarification.
Correct.
Mhm.
Thank you.
Mhm.
Yes.
Yeah.
There's a normal way to do a cash out refi on a VA, but then you're charging the normal fees and everything on that.
Mhm.
Okay. Now, also that IRL, all the other closing costs are still involved in a
Yes.
refinance because it's a normal refinance. It's just only a mortgage credit report, no income, no asset documentation,
Mhm.
no appraisal needed.
And no money out of pocket because it's wrapped back into the loan.
Correct.
So no
Correct.
money out of pocket.
They do have a formula that we have to use.
Mhm.
We have to meet to make sure that we are actually reducing your interest rate and reducing your debt.
That is correct.
Okay, so
Mhm.
that's what that is about. But there is a formula that we as a mortgage lender with the VA office will quickly put together to make sure it does match.
Yes.
Literally, I don't know one that hasn't been able to be met.
Yeah.
Because why would you do a refinance if you're not lowering your rate, which lowers your overall payment?
Yes. Mhm.
Right.
Right.
But if you want cash out, different story. We go a different route.
Yes.
Still can do a VA loan, but you go
Yeah, but it would not be under
In
the
fact,
IRL. Mhm.
right.
Yeah.
That is a pro to a VA loan. Also, is VA cash out refi is the only cash out refi type of loan that lets you go to 90% of your equity
There
position.
you go. Yeah.
So
Versus
all the
others
other
that
ones
only allow
stop
80.
you at 80%.
Correct. Yeah.
So another plus to having a VA loan if
Mhm.
that's if you're eligible for that.
Eligible for that.
Yeah.
Mhm. And we can do manufactured homes
Absolutely.
on the VA loan as well.
Yes.
Mhm.
And that is the only loan program. And we had talked about manufactured homes several times, several
Programs back.
Yeah, whatever we do.
Mhm.
So that is the one loan that actually the home could be moved and VA doesn't care.
Mhm. Yeah, we don't have to prove that one
We don't
time
have to
sit
prove the
down.
one-time sit down.
Correct.
So that is still the only loan that's available for standard financing on a manufactured home if the home's been moved.
Mhm.
Home still has to meet HUD stickers 76 or newer, and it still has to be on a permanent foundation and declarable property, but it is the easiest to do on a manufactured home.
Yes. Mhm.
Yeah.
Yep.
I'm telling you, no better loan than a VA loan.
Yeah.
Just none.
It's
I love doing that.
phenomenal loan program.
Yes, I love being able to help the veterans that have earned this use their eligibility.
Yes.
Anyways, I'll get off my soapbox on that.
Mhm.
One of the other pros to a VA loan is the fact that there's really no credit score required.
Oh yeah, very true.
So if you do have lower credit scores, we have to go manual underwriting. That's okay. As long as you fit there. But the credit score requirement now from lender to lender, they might have an overlay,
Mhm.
but VA really does not have a credit score requirement.
Yeah.
So again, credit is looked at, credit's reviewed. We've got to see, we got to make sure it meets manual underwriting,
Mhm.
but that's a plus to that.
Yes. Mhm.
VA's debt ratio is also the
yeah.
most forgiving
Mhm.
of all the loan programs.
Yep.
There's a guideline that they use,
Mhm.
and I'm saying that term loosely.
Yeah.
Because again, if a lender has something different, that's the lender, and that's okay.
Mhm.
But VA specifically has the loosest guidelines on there. Because what VA does do,
Mhm.
this is the only loan that actually has us look at what's called residual income.
Yes.
And again, there's a formula to use on it, but residual income is we will take your gross income, we're going to take out the debts that you have, we're going to take out your new mortgage payment, and then we're also going to take out taxes according to the VA tax calculator. We're not going to look at what the taxes are that you pay to the state and federal and FICA and Social Security on your pay stubs, but we are going to use the tax calculator the VA says that we're going to use per family size,
Mhm.
and we're going to remove that. Money left over that is called your residual income. That's the income you use or have to live on truly for the rest of the month. And VA has their own requirement and says, okay, for a family size of here, on a loan amount of here, residual income has to be XYZ.
Yes.
So if you meet that residual income, that's why your debt ratio could actually be, I mean, we've closed a loan where the debt ratio was above 60% because residual income had enough to cover after everything else is taken over and left over to pay other payments that we're not going to see on a credit report over the month.
Correct.
Now, that's not always the case, and you might think, why would you do that to somebody? There could be other factors on incomes we can't use.
Correct.
But that is a plus to the VA loan, is they're really going to look at that residual income.
Yes.
That's also non-forgiving on a VA loan too. So I guess that could be the con, because you could have on the other side of that coin, I've had clients that have a very low debt ratio. The time we get that residual income calculator, they don't meet the requirement of VA, and VA will not allow that to close.
Yeah.
So that could potentially be a con. That's very rare that does happen.
Yeah, I feel the same way with that. It's very rare,
but
it rarely comes up. But it is something that we want to let you know, throw out there. That could. The other thing that I was just thinking about as we talked about this is that if I'm an entitled, I'm a veteran and I have the entitlement, and I have my spouse, and let's say my spouse has had some credit challenges. Is there a way on this loan that I could not have my spouse on this loan, or does my spouse have to be on this loan, or does her credit have to be on this?
Because we live in a community property state, we would still have to pull that non-purchase. To answer that question, you asked that they have to be on the loan. The answer is no. They do not have to be on the loan. Okay, but because we are in a community property state, we are going to pull that what we call the non-purchasing spouse's credit. Just like the FHA program we talked about, we are going to review what's on that. We're going to put any debts on that credit report that we see in only who's ever buying, if the veteran's name, and as long as the debt ratio and the residual income still meet, you should be okay. We still have to cover that piece. We do still have to make sure that there's not a lien that's going to be posed on the home because of the non-purchasing spouse. So we are going to look for those kind of things also.
Okay.
Okay.
Yep. So that could potentially be a con.
Yeah.
Depending on the debt of the, if I'm not able to put my spouse on it, and that could potentially. So this is one of those other things.
Right. And that has everything to do because we're in a community property state.
Yeah.
Okay.
Yeah.
Now the VA office does state they did make a change on their guidelines. For years and years, if you were not married, you could not be on the loan with the veteran.
Yes.
Whether it was your partner, if you were not married, whether it was like we've had people that want to put their mom and dad on it, that for years they would not allow that. There was a change just recently, but here's part of that change. You could go on it, but that limits the amount that the certificate of, so there's an amount the VA office gives us with that certificate of eligibility, and we might only be able to use a quarter of that amount, which might not really qualify you for a purchase price where you want to be if you add someone you're not married to the loan. So the reality of it is it's now allowed, but I can honestly say I don't even know that we've closed one without that, just simply because it changes how much they could qualify for. And instead of maybe, just here's an example, I'm just throwing off the top of my head. Instead of maybe 350,000 where you want to be at, you might, because you limit what that eligibility amount could be used at, might be 150.
Yeah.
And truth of the matter is, to find a home at that price range is probably slim to none.
Yeah.
So that can be a con on that VA loan. And the other thing on VA, and I just thought about this, I was going to write that down. I'm glad I remembered this. Here's a myth. Okay. People think that you can only have one VA loan out at a time.
Oh, yes. Yep.
That is not accurate. You can have more than one VA loan.
Very true.
Now, Again, the VA will give us the formula. In fact, we have all this information at our fingertips because we're direct lenders with VA. There is a formula that we would do if you want to retain your current property. Now, you can only do a primary residence.
Yes.
Okay.
Yep.
So,
and they must live in it for 12 months before
correct.
renting
So if you
or anything.
own a VA home already
Mhm.
and you're going to turn that one into a rental and you want to buy another VA loan
Mhm.
as an owner occupied, you can do that, but you can't buy, if you own a home and then want to buy an investment property as a VA loan, you cannot. You'd have to live in that home. But you could do that, and then you could have more than one VA loan. Again, there's a formula, and the
Mhm.
crazy part is your mind thinks, okay, I can, if I have my eligibility, the eligibility is given in dollar amounts, and so typically, if you don't have a VA loan, your first eligibility amount's $144,000. That doesn't mean that's all you qualify for. That's just the eligibility dollar amount that they give us to work the formulas off of.
Yes.
Okay.
Correct.
So if you want to keep that one, that 144 is already made up here, but then they allow you to go higher than that with another certificate associated with that. I'm trying to make this layman's terms.
Yeah. Flow as easy as possible.
Okay.
Mhm.
So that being said, if you own that house and you want to keep that house, you might now qualify, and you might have to buy a new house at, say, 400,000 or higher.
Mhm.
And you would think that would be just the opposite. It'd be like, oh, if I have a VA loan, I can only max up to maybe 400,000. That is not the case. They flip flop that thought process all the way around.
Yeah. This is
But again, if you want to do that, reach out to us. We need a little bit of information from you. And typically a soft credit report will get us what we need to get the information. And then we can work the formula out if you want to retain your current VA loan and get a new one, what your new purchase price would be. So you can have more than one VA loan.
Yeah.
At a time. Yeah.
More than one at a time.
Yeah.
So
And a VA is assumable loan.
yes. Even if you are not a
Veteran. Even if you're not a veteran and somebody has a mortgage on a home that they're selling and they have a VA loan, you can assume their VA loan.
Mhm.
But here's the con to that. If you are the veteran and somebody that assumes your loan is not a veteran, your eligibility still stays on that home. So as long as you qualify for another one and that works for you, that's okay.
Mhm.
Okay, so you'd want to do that formula. You'd want to make sure, because if you're doing an assumable loan and the person taking over your mortgage is not a veteran, they can still do it if they qualify without being a veteran.
Mhm.
Confusing? You bet it is.
Yeah.
Let us walk you through it.
Yep.
We can help.
We can help. That's what we're here for.
Yeah.
But I think we're getting to the end of our program
Yeah.
time. But again, as Debbie stated, we these are very dear and near loans.
Love them.
We love them. And we want to thank anybody and everybody that has served for our country.
Absolutely.
We value your service and we thank you.
Yes. And we want to be here to help you.
Yes.
So have a great week. And here's the very end where we're going to have to figure out how to close this down.
This is the raw part.
Do you want to do this? I want to do this.
Thank you. Thank you, everyone. Have a great day.